Hi, this is Aptamer with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 1st of May. Starting with the FTSE 100, which is attempting to make it 14 days in a row on the up. The last time we had 13 days in a row was apparently 2017, and the current situation is it's a bit of a crossroads in the sense that we've come up against the pre-April support for this market, so around 8480 to 8500, and also the 50-day moving average as well. So this is the crucial area. If the market was not going to be able to achieve 14 days in a row, this is probably the place where it would fail. Otherwise, an end-of-day close clearly above 8500 could give us a journey back towards the March resistance at 8700 plus. On the downside, not expecting anything worse than the 200-day moving average, currently around 83.49. RSI perfect for further gains, so at 56, and that is probably the main plus point that we have at the moment. Moving along to the DAX, and here the cork and mortar rebound slightly under pressure today. We've got a key reversal to the downside. Managed to get through the 50-day line, which is obviously more than the FTSE has done so far. A logical support there would be the top of the recent gap there, 21,700. But with the RSI in the 50s, still the glass appears to be half full rather than half empty at this stage. Still eyeing up the highs perhaps by the end of this month if we can stay above the top of the latest gap. Moving along to the Dow, and here picture that of a market which is well, it's done exactly what I suppose we didn't really want it to do, which was to get stuck at 40,800. But it's early days yet. We may still be able to get through that. The obvious target after that is the top of the initial April gap there, 41,600. So that would be the target, especially while we're on the right side of 40,000. Moving along to the situation at Bitcoin, where we're still in that bull flag. Well, we expect it to be a bull flag. Mid-move consolidation. Just looking for an end-of-day close really through 96,000 to take us up to 100,000. Plus, still looking for as high as 128,000 by the end of this month. But obviously it looks like a bit of a punchy call at the moment. But 120,000 on its way while we're above recent support, or broken support, the old range at 90,000 and the 200-day moving average. Moving along to gold, and here a big question mark as to whether this market needs a proper shakeout or not. So far finding support towards 3260 and the floor of that rather sharply rising trend channel there from March. We do break down the obvious next level down would be around the 3170 level, which was the initial April resistance for this market, but we might still just get away with a bounce off the 3260 zone. RSI still above neutral 50, so that gives us hope that we could still maintain the momentum. Moving on to the stocks, and starting off with Aptamer, which has bounced very sharply in the recent past, actually. A bear trap rebound. Look at all those very strong candles. Gap higher yesterday, in fact, 2 gaps higher in the recent past. So looking as though this stock could easily hit the top of that broadening triangle there, heading towards 0.5. Could be a bit more than that as well. Looking for that in the first part of this month, while we remain above the old February support there at 0.35. Next up is Cadogan, and here the picture of a sharply, a rising trend channel. We've got the support above the 200-day line, which is rising, and the rally here started with an unfilled gap to the upside. Tends to be a strong signal. Looking for the top of the channel there towards 8 3/4 pence. Looking for that by the end of this month, while we remain above the floor of the channel there at 4 pence. On to Catenai, which is back again. Had a strong day, but then slightly faded yesterday. But having another go, the support came in a little bit lower than we would have liked. The old target there, 0.44. There was a bit of a move down to test the old resistance there from January in the upper 30s as a new support. But that's all done now. And the longer we stay above 0.44, the greater the chance of a retest of recent resistance through 0.8 pence. Sometime during May. Distil is next, and here You can see that we've got the shares jumping within that broadening triangle that we drew previously. The trigger here was 0.06 being broken. That was done at the beginning of last month, and after a false dawn, we've got a second retest of the 0.11 area. Best case scenario target at the moment by the end of this month, 0.21, and we're looking for that, especially while we're above recent resistance at 0.09. On to Emmerson with its multi-billion claim against Morocco. I'm sure they're all delighted over there and obviously shaking in their shoes. But the current situation here is that we've hit our initial target there again, actually for the third time now, which is getting rather boring, but 2.3 pence. Above 2.3, the next leg up could be the upper parallel of that rising trend channel base, and that is heading for 3.6 pence. And looking for that as soon as the end of this month. Ideally, we stay above that 50-day line, 1.7 pence, whatever happens. On to Eurasia, just to upset the bears, and here, decent bouncing for the stock at the floor of that rising trend channel, looking for an end-of-day close through the 50-day moving average around 5.1 pence, which hopefully we'll get today, and get the RSI back above neutral 50. The picture here is that we could see as high as 8.5 pence, the top of that channel, by the end of this month, while we remain on the right side of 4 pence. Another Russia-Ukraine play comes in the form of Ferrexpo, and interesting that there's been a bear trap rebound from below the February support there at 50 pence, and above that, really looking for the shares to head back into the low 80s, the main February-March resistance, and hoping for that to happen by the end of this month. Ideally, there's a nice end-of-day close through the 50-day line at 64 pence to trigger a move up to the low 80s. On to GenIP, or GenIP, whatever you want to call it. Here we've got a falling trend channel, but the shares need to break the top of that line there, or top of that channel there at 33 pence. If we can do that, following today's gap, then we could be seeing a long-awaited breakout towards 40 pence sometime later this month. Did highlight Rome resources at the lows, so 0.16, 0.17, and here you can see after that gap higher that we had through 0.18, shares are on their way, and obviously the situation in DRC looking rather better. Broken that falling wedge there in the 50-day moving average at 0.2 pence above that. We're looking for 0.32 by the end of this month, but it's a bear trap gap reversal, one of our favorite signals, and that is the technicals and the fundamentals combining well. Moving on to Tracsis, which I had a target for at the top of that triangle there, 454. Above that, looking for a fresh leg to the upside as high as £5.60 by the end of this month. Obviously, you can see old resistance around the 430 zone, so we'd like to stay above that. Finishing off with another big winner in the recent past, which is Xeros, just approaching our third target there, the target line there around 1.5 pence. End of day close above that, we're looking for as high as 2.3 pence by the end of this month. There's a gap to fill up to 1.8 pence in the meantime, but this is looking decent while we're above recent resistance at 1.25 pence for Xeros. That's it from me today. More updates tomorrow.